Okay, good afternoon, everybody. Welcome to the weekly take on the market. I will be your host. Today is June 5th, I believe. Maybe it's June 6th. Anyways, it's Friday. The market's been closed for a few hours. My name is Scott Sinclair. I will be your host. I'm the manager of the Premium Product Group here in Investors Business Daily. I am remote, so hopefully this video goes smoothly. I'm out of town for my nephew's wedding, so I'm in the lobby of a hotel, so we're gonna see how this goes. I did a test, everything seemed fine, so we're gonna go with this. The disclaimer, uh, not licensed, nobody at IBD is licensed, can't tell you what to buy, what to sell, what to hold, whether you should hold XYZ because it's gonna split. Do stocks go up because they split? Do they go down because they split? None of that I'm allowed to talk about. These webinars are vetted for compliance, so we are allowed to speak a little bit more freely on these types of webinars, videos, IBD Live, etc. So overall market thoughts, industry groups, stocks to watch, and then the quote of the week, the usual routine. Um, so I sometimes wonder if it's me or if it's just out there, but most of the screenshots I find on Twitter and stuff are all about how extended the market is. And from a contrarian standpoint, I wonder if that means it's just going to get more and more extended. But this is very interesting from top-down charts. The euphoria meter, a combination of the forward PE on the market, the VIX, bullish sentiment, and highest it's ever been going back to 2000. So interesting. I don't put a lot of weight in this stuff, but I do like to look at this stuff, especially on the other side. So if we ever to get into a bear market, um, the anxiety meter maybe is what they would call it, but something of that nature would be the panic meter would be more interesting as far as a timing tool. AI is all the rage. I don't think that's surprise to anybody. Um, I I don't know where we are in the cycle of AI. I feel like Nvidia's probably in the later innings of its first cycle, if that makes sense. I've been to a couple of um, parties or birthday parties or graduation parties is what it was, where people have asked me about Nvidia and telling me that they own Nvidia. And I just find it interesting because I'm a student of market history that, at 200, nobody's going to tell you they own Nvidia, but at 1200, they'll be screaming from the rooftops that they own it. And it's going to split 10 for one. And, that's normally that'd be a pretty large split. So we'll see. I just find it fascinating the way markets work, but if you don't own Nvidia already, it's like what have you been waiting for as far as to get into it? But a lot of people do. They find a way to get into it later. But AI is all the buzz, and you can see a lot of people based on this chart. A lot of even the companies are kind of falling to the prey of having to talk about what their AI strategy is. Uh, Correlation of the S&P 500. So there's a lot of talk about equal weight and the underperforming and the S&P and then the Nasdaq, and then you've got all this talk. I saw a great tweet by Jason Shapiro where he said he was going to change his benchmark to the S&P equal weight, and it just improved his performance by 6%. So uh, it is what it is. The S&P is the first or 1A or 1B as far as indexes, and that's what everybody is chasing. And so it's becoming more and more correlated. In other words, all of the members of the S&P are, for lack of a better word, doing the same thing. All right, so let's jump into the charts. I'm going to stop my video for the sake of the charts. I still haven't figured out how to move myself on this thing. Maybe one day I can, but let's get into the charts. So here is a chart of the
NASDAQ. And because I am out of town, it's sometimes it's kind of nice to be away from the watching of every tick. And I was on a plane yesterday and I was busy today, so I really didn't watch the markets overall last couple of days. And you can see like I literally missed nothing. I missed nothing. And so being glued to it isn't the be all end all answer. If that was, everyone would just quit their jobs and glue themselves to the screen. So you want to step away from it, take the bigger picture view. It's a bull market, it's an uptrend, whatever you want to call it. The bottom line is the market is at this very moment, it's in an uptrend. And truly, as far as if we're ever going to get in a correction or bear market, it's going to occur at or below this line. So we're a long way from that currently, 14%. Now, does that mean we can't have some kind of correction? It's always possible. You should always be open to anything of that nature possible. But the best information you have, and truly the only information you can make a decision on, is sitting here right in front of you right now. And the markets are fine. Now maybe there's like the equal weight. What is it? QQQW, is that the equal weight? QQQE. So here's the this is not necessarily the NASDAQ, it's the QQQ, but the equal weight. And you can see that hasn't made a new high. It's building a pattern, but it hasn't made a new high. And this is what a lot of people will mention as being an issue. And maybe it does turn out to be an issue, but right now, as we sit here, it's not. And I know a lot of people might not want to hear it, but the M in Ken Slim is just to me in the last kind of handful of years, I would say probably from here on, there's only been a few periods where I've been really utmost concerned with the M. Here's the COVID bear market. This is a little mini correction here. And then this is a long grind out bear market. But honestly, the average stocks in this bear market, the Shopify's, the Twilios of the world, the ARK, they topped long, long before this ever happened. So if you're waiting for this bear market to materialize and you were in the Shopify's and ARKs and Twilios of the world, you missed your sell signal months in advance. So I just think that the M is, I don't want to say it's not important, but it's not as important from my process. I just rely heavily on, am I in sync? What are the stocks I want to own? How are they acting? The stocks I wish I had owned, how are they acting? The stocks that I do own, how are they acting? And if I only need to own 8, 10, 12 stocks max, even if the market's narrow, you can still find 8, 10, 12 really good stocks unless you get into a really bad bear market. So in a bear market like here or here or here, I don't care how good your company is, your stocks are, they're going to go down. So that, keep that in mind as far as the overall M, but you're going to see it in the stocks. I mean, let's pull up ARK, for example. And look, here you bad break. This is a monthly chart, tries to rally, can't, rolls over, makes a new low. So it made a new low on December 1st. I'm sorry, late 2021. And here's the NASDAQ. There. So as ARK is making a new low, not a top, it's actually making a new low. The NASDAQ is literally 1 month off of its all-time high. So this did nothing for you as far as helping you to guide your position in ARKK if you had one. So I think you get the idea. Let's jump to the S&P. And you know what? It's so funny. I didn't even realize that it had refreshed. I thought I was still in the NASDAQ. It looks so similar, especially the last 2 days. So not much there. IWM, it just does nothing but builds a base, builds a base, builds a base, never goes anywhere. I don't quite understand this index. I don't watch it at all. The only time I ever pull it up, it seems, is when I'm doing my video. And then how about the Dow?
And I was short the Dow as kind of a counterbalance against my longs. And I made a little bit of money. You're not going to get rich shorting the Dow. You're not going to get rich shorting, let alone shorting the Dow. But it allowed me to stay with some things that when it looked like maybe the market was in a tiny spot of bother. This is the weak sister for sure. Look at your relative strength, making a new low, well off of the lows. So the overall strength in the market's kind of holding this up. If you wanted to be short, if you wanted to an area there, this should be your target stocks that not necessarily have to be in the Dow, but that mimic Dow-like qualities or components of stocks that are similar to being in the Dow. Let's go ahead. I think that's good enough for the indexes. I'm going to jump to the industry groups. And transportation ship is number one. I thought this is very fascinating because my biggest position is in this group. And so it's just kind of pulled me in as this group has gotten stronger and stronger. Computer hardware peripheral, semiconductor fabulous, computer data storage, building maintenance still hanging in there, transportation equipment, retail consumer electronic. Big move. 167, 778. Not a lot of stocks, but that might be an area you want to focus on if you haven't already. Gold doing what gold does. When it looks good, it goes down, and when it looks bad, it goes up. So it's just the toughest area, I think. And I haven't been in that area for months. And 13 still, it's hard to believe it's still that good. Energy solar moving up. First solar looks really good. NXT, I guess we could pull those up. Apparel shoes always seems to be hanging in there, and you get the idea. It's a very diverse group. I'm sorry, very broad area of groups. So there's lots of. This is like to me more important than what the Dow Jones is doing or the Nasdaq. You could literally own a single stock in 8 of the 10 groups and be fairly diversified, I would think. If we were to cherry pick the best stock in each one of these groups, kind of give you an idea. And you don't Nvidia, you don't some building maintenance stock, you don't a transportation equipment manufacturer, steel specialty alloys, maybe that's Carpenter, etc. So I think the groups look fun. There's no story here. There's nothing that defensive. So I'm fine with what I see here. All right, so let's jump into the stocks to watch and the one everyone's talking about, NVIDIA. So I have a lot of thoughts here. You can see I've drawn this channel, this upper channel line on NVIDIA right here, and it got, excuse me, very close. Not quite there yet. There's more of an art than a science to this, but it looks like it's pushing up into the upper channel line. You got a 10-for-1 split coming, I guess, effective Monday. If you're a shareholder today, you're going to be part of that 10-for-1 split. So it the anecdotal evidence that I had at the parties. So I do not have a position in NVIDIA. It just feels like it's not a I don't want to say it has to come down, but it feels like a shakeout wouldn't be out of the ordinary at some point in the next day or 2 or 3. So keep that in mind. You get the split, maybe you take some off if you want. I don't know how to handle it. Wouldn't even, if you have a huge cushion, it's really hard to know how to handle that. It's a great problem to have. I always like to feed in a little bit just to reduce the exposure and the volatility, because if it comes in 10% and it's 40% of your portfolio, your whole portfolio is going to come in 4%. And that's not even accounting what the other stocks might come in as well if NVIDIA were to come in 10%. So have a plan. That's the main thing. I don't care where you own it, how much, where it's always, as long as you have a plan, I think you have a chance. You can do pretty much whatever you want in any of these names. CrowdStrike, after hours, see it's up a little bit more. they got added to the S&P. The base, it's okay. This weekly base is not all that great. The daily looks much worse. But the quality of the company, I think this is best in breed. I've said it 100 times as far as cybersecurity. So you can, I mean, if we were to do a comparison chart of this with like Zscaler, look at how far off Zscaler is. How about SentinelOne? Looks terrible. How about Palo Alto? I know there might be like maybe Cybers hanging in there. It's not too bad, but you get the idea. Crowd to me is the Nvidia of cybersecurity. So that's the one you want to own. And if you own it, great. If it's going to the S&P, you're going to get a little bump based on that. What else is out there? ANF. So it does give you this power from pivot flag. I think this is a little bit misinterpreted, for lack of a better term, how to handle this. It doesn't mean you have to hold it. I think what it means is you can, if you want to try to hold on to a big winner, but I think where the stock is in relation to its overall move, like if we go to a monthly on ANF, 20 to 180 is now the time you want to hold for, the 8-week hold rule. Not in my book. I think that and let me best fit this. You can't even see the move. Let me best fit this. So, coming out of the first base, coming out here, maybe, so somewhere along the line earlier in the move. Now, I know it says it's only at second stage base, so maybe I could be wrong. But one thing about ANF that I noticed, and somebody mentioned on a podcast, kind of perked up my ears, is I guess in its history, it's had like a handful of 80% declines. So this is probably 80%. That's probably 80%. This, I don't know, maybe close, and maybe going backwards more. They're there. So look, it's teen, and the teens are fickle. They love it one week, they hate it the next. So I don't think I would be considering this. But if you bought that here, you're up 25% and, probably have some kind of line in the sand. Worst case, I would say, look, if you ever get up for me, it's around 10 to 15%. I'm not going to want to turn that into a loser. So if I get up 10, 15%, my absolute worst case is I'm out even. You get up 25, 40% of something, you really should take some off or have a plan where you actually make some money on that trade. So maybe it's a sell a quarter of it and stop out on the rest type thing. Again, have a plan, have some type of plan, a thought out plan, and follow the plan. Step 2, have a plan and follow the plan. So let's look at some of the other. Microsoft hanging in there, but really losing relative strength. Let's see here, it's 83, and it's a big company. It's hard for it to maintain relative strength. Amazon, nothing wrong with that one. Apple, it's okay. Nothing wrong with that one. I have been in this one. I'm not in it now, but I have been, and so it's these are all the stocks that are going to move the market. What else is out there? Let's look at some of these plays look tired. So this is very ANF like, right? So CEG, now maybe not quite the earnings growth of ANF, but it goes from 120 to 240. And now it just seems like it's run into a little bit, maybe a little tired. VST is even better stock than CEG. Runs from 34 to 100. It tripled versus the double for CEG, and it looks tired. So this is an area that's kind of lost a little bit of leadership. The metals, and let's just look at like gold. So gold did not have a good day today. Silver, I don't want to say they look broken, but these are tough stocks, these miners. So here's AEM, here's AGI. I just don't have a lot of confidence in those names, to be honest with you. I rent them it for sure versus owning them and haven't been in them for a while. MU hanging in there really well. Qualcomm hanging in there really well. So some really good leadership out there, I think. These aren't stocks that I have handled all that well, but other people out there probably have. Meta looks interesting to me. I like the shakeout. Comes back up through the 50-day. If it can just kind of stay up here through the 50-day, that would be interesting to me. It would give you market exposure as well. Let's talk about very quickly. So not a great day for Bitcoin, but it's building this base, and I don't know, the jury is still out. I'm more open to the idea of Bitcoin than I might have been 12, 18 months ago, but I still haven't kind of wrapped my head around it and been excited about it. So not something that I have got all that excited about. So for whatever it's worth, I'm lightly invested. Part of it is I'm on vacation and going on vacation, and part of it is I like to sell into strength, and so I don't own Nvidia because I've been selling into strength, and then there's been nowhere to get back in because it hasn't really pulled back. So I own like Sea Limited, which I really like as a company. Kind of fair warning, did so well with it in the COVID bull market. It's kind of a pet stock for me, but that's like something that I own. And in that transportation ship, I've somehow survived. And let me take this off of Best Fit. Oh, I'm on the daily. I'm like, where did the Best Fit go? What am I doing wrong? Why am I struggling with this? I know why. I'm looking for best fit instead of standard. I apologize for that 10-second window. So this is something that I'm in, and so far so good. I've survived the gap up. I think I'm getting a dollar dividend that was payable as of yesterday, I believe. So hanging in there, and there were some stocks in this group, like it was a GSL and others that I missed that have done really well. LPG did announce a secondary. So, and this is it. This is why I don't know. Maybe it's time for a whole nother video, but most stocks do this, like what LPG has done. Some of them continue to go, the Nvidias of the world, and those are the great stories. But honestly, most stocks do this. If you didn't take some off in that 20% zone, you've given back almost all the gains, and that's frustrating. And I know I talked to a lot of people, and they're frustrated by stocks because of that. So maybe learn to take it, at least a little bit off. KSPI, it's not a great base, I have to admit, but I like the fundamentals. They're really strong. International. I like this group. There was a great group before. It's kind of fallen by the wayside, but it seems like an area that can find its way again. So this is an interesting name, and for whatever reason, I've just kind of gravitated into these stocks in these areas, and I just don't have a lot of exposure. I'm not 100% invested in my like cash accounts. I am sure I am missing some, but for the sake of brevity, I'm going to uh, move on to quote of the week. And it comes from, and I forgot to mark where it comes from, but it comes from Reminiscences of a Stock Operator, which is just filled with so many great quotes. I literally could probably do a quote every week in this video just from that book alone, which is why everybody seems to love that book. So it's so quotable and readable. Many years ago, I heard a remarkably successful speculator live in the California mountains, received quotations 3 days old. Imagine we're glued to our phones. I can get a quotation in about 90 seconds. I make special. They asked him about that. How could he do that? How could he not be watching the ticker and all that and still do well? And he said, it's because I make speculation a business. I'd be a failure if I allow the confusion of things or let myself be distracted by the minor changes. I keep a record of what's happened after it's happened, gives me a rather clear picture of what markets are doing. Real movements do not end the day they start. This is a really key one. I need this one myself, to be honest with you. Real movements do not end the day they start. It's like the Nvidia move. It's incredible how I think I think my very first Nvidia would buy was like 360 or something like that, 350. And I distinctly remember buying it just to buy it. There was no spot to buy it there. I just said, I got to find a way to get into this. And if I get stopped out, I get stopped out. But then I'll try again and try again. Because this stock's going higher. And I did not profit as much as I should have with that type of entry, 350 to 1200. So this is perfect. The real movements, they don't end the day they start. It takes time to complete the end of a genuine movement. So being away from it is good. It's being in front of the screen is not. I tell you, I've been in front of the screens for a long, long time. It's not the perfect answer. It has few advantages, but it definitely, like everything pretty much in life, has some disadvantages too. So our contact information, 800-831-2525. I will be gone for the next couple of weeks. So unless something drastic happens in the markets, we won't have a couple of weeks of these videos. And have a great summer, everyone. And I'll hopefully see you guys in start of July, early July. We'll be back in business. Thanks a lot. Bye-bye.